Hey everybody, welcome back. Sive Morten here with the ForexPeaceArmy.com. Let's take a look what we have on euro currency. So with the trading plan that we discussed, we suggest a couple of patterns might be formed in the beginning of the week. So first we talked about the bounce that we treated as some momentum trade, as a bread button trade on the forward time frame chart. But in general, we suggested a bit more extended retracement that potentially we could use for taking the short position, because context remains bearish across the board. So we have context bearish on the weekly chart, on the daily. And the problem why we can't take the position immediately, actually as it was on the weekend and last week, just because of the oversold area. On the weekly chart, we have very deep oversold. So market here is just starting go out of it. The same we could say on a daily. So market touched the oversold area and now is showing pullback. So here everything goes with the plan. On the forward time frame chart, you could see that the first retracement has happened. Market hits 30%, 50% resistance here, as we suggest the first resistance area, where we said you could consider taking scalp short position with a possible downward action. Initially, we have no idea to take the long position here, although we have known that it will lead to some pullback, because mostly we intend to use the rally to sell, not to buy currently. Despite that, we have shot some bullish patterns, such as a stretch pattern on a daily chart that suggests a pullback. For us, it's more interesting how to take position with the context. Although, as we said, it's not forbidden, so if you would like to, you could take the long position here as well, and you can see the bounce has happened. Now we slowly are coming to the second stage. So first of all, if you take a look at the hourly chart, initially on the forward time frame chart, we said that 1570, it might be first approximation that we could keep an eye on, where potentially interesting patterns might be formed. If, of course, external background will not change, the fundamental background will not change, the confluence area might be interesting to consider taking the short position. Then we will see what will happen. Now on the hourly chart, it means that here we are waiting for some completion of the bread and butter trade with this downward action, reaching an area around 1450, 1455 probably, where this downside action might be over. And then according to the scenario that we discussed, we will be happy to get some kind of the ABCD pattern to the 1570. Precisely that the level that we talked about here. Potentially we could get good looking guardrails cheaply to sell, which is potentially might be interesting for taking the short position. That in two words, our short-term plan. But today I also would like to show you a bit bigger picture. You probably might be amazed with this, and just because it carries so much big and thrilling patterns, that's, well, we could think about this for a very long time, and all of them looks really interesting. So let's start from the dollar index. Mostly I will show you it's on the dollar index, and it stands on weekly, monthly dollar index charts. So first of all, what I would like to show you is a really big picture. So somewhere in this area, in this moment, in 2009, 2010, I was reading the Forex military course that you could read on our forum right now. And that particular, now those people who were on the forum at this moment, remember that we have talked about in the book, we talked about such an issue as a dollar smile. And it has the fundamental background, but also at this moment was forming the guardrails cheaply to buy with a big quarterly grabber pattern that we said that here's we will start the upward action at least in excess of this top, and then all this journey begins. So very interesting situation. If you take a look at the final point, actually what we talked about recently in the same pattern you have on a euro. If you remember, we have the ABCD on the euro monthly. I could even remind you, show you this stuff. You see it every time when we prepare the weekly reports, right? That's the stuff that we have on a dollar index right there. But if you take a look carefully, I even keep the swings the same. I am not adjusted it. I just taken the swings from this and transferred him here, this copy, to this point. take a look how equal they are, almost the same swings. And that was also regardless tripled buy, right? But it's not the end. So take a look, initially it also started with regardless tripled buy. The next top was precisely 1618 extension of this swing, so whole regardless tripled action. This top was precisely 1618 of the another one. And currently we're coming to the very thrilling question: how we should treat this top in the current moment. I'm just giving you the hint. So I for a moment will delete these lines because we actually do not need it too much. Just to keep the picture a bit clearer, so you understand what I would like to say. Okay, so whether we should treat it like this one, three drive pattern, or we will get another one to this point, if everything will be once again it's 1618 as it was previously. So should it be in this way? I just will adjust a bit just to show you how it looks like. Right there, precisely 1618, 126 by the dollar index. And in the current situation, why I'm actually speaking about this, I would like to return back to the bit shorter term scale, weekly and a daily. And if you carefully will take a look what's going on currently on lows, when the three drive has been completed right here, and not the three drive, sorry, regardless triple two, and the same on here. Let's just increase the scale, all this stuff. I will take it off. You understand what I'm speaking about. We do not need it anymore, as well as these extensions. So you could draw it that later by yourself in your charts. Just let's increase the scale, what we're looking here on the bottom. And you already could see what we're getting here. And that's might be the reverse hand and shoulders pattern. That theoretical stands in favor of two ways. First of all, it might be the starting point of another drive, if we think that the three drive is not completed and we are just on the second drive. Also, it justifies the pullback that we're suggesting right now. So we said that's maybe the pullback. And existence of the hand and shoulders here suggests that it might be correct. And even with the bigger scale than we are considering right now, but just because we're talking about daily chart, later we could increase the scale. But on the weekly chart, you can see that it suggests that it might be the right arm starting here. And it stands more in favor of upper continuation here. It's a bullish reversal pattern. But at the same time, for instance, if we suggest this pattern will fail and markets start taking out of these lows, what does it mean? It means that we return back to the initial three drive. So you'd understand how important for a mid-term and long-term perspective this current pattern. The failure of this pattern suggests big drop. And starting of the three drive, which is, minimum target of this will be the bottom between the second and third drive. It means that the dollar will drop below 90. It will maybe even to the 487 major 618 support. If market holds and start upward direction, it means that we are going to the maybe third drive and going to 121. So no new big top on the dollar. Of course, this will be backed by some fundamental events, but this might be really important. Also pay attention what this trend line is. So I will just show you that this is all-time big support line on the dollar index. It's very important. So that's actually what we have currently right there. Another indirect sign why it's really might be of the upper direction here, just because if you take a look at the 10-year bonds, that's monthly chart. Take a look what the pattern has been formed here. It's bullish engulfing, really huge. This is on 10-year bonds. It suggests at least upward action back to the 4.5%. That's of course will support the dollar, and it increased chances that we're getting still bullish pattern here, not the failure. But it's not all over yet. Those of you who also stand with us for a long time already, You know that we talked about the quarterly chart of the 10-year bonds. Previously, when we considered, usually we take a look at the big pictures in the beginning of the year. And that candle that holds the overall price performance almost for the year already on the 10-year bonds is also big quarterly bullish grabber. Bullish grabber suggests taking out with the top end action on the 10-year bonds back to the 5%. How it could happen, who knows? But that's what the technical analysis tells us. If it will be 5%, it means that the dollar index will have more chances to keep going to the 121 rather than to the drop. That's the common thoughts. Here's the task to you. Think about it, come to some conclusions. I hope this will be interesting to you. So I just decided to mix a bit our daily routine with interesting pictures that we see currently on the long-term charts. Returning back to this to our subject that we are considering right now on lower time frames. Well, this performance, now the chances that we will get the bounce here, they could be considered quite in a different way, right? So the things that we just discussed on the big charts, it's well, lets you to take a look at the overall situation with the big different eyes and suggest what really could happen here. But it doesn't mean that we will not consider chances for possible taking the positions, although we suggest, if of course bearish context on the daily chart will not be broken, if we will see that market is turning to the bullish, we will not consider taking the short positions on a daily and hourly chart trading basis. But for now, I think that confidence area around this level might be interesting, at least for a short-term bearish position, and let's see how it will turn. Potentially, if indeed we start getting these head and shoulders, of course, we will be trade with this direction, as it really might be very handy. When you do know the direction, it might be easier to make the decisions on particular trades.